Good morning. Jeffrey Friedman, Senior Commodity Broker, RJO Futures, in the 14th of November with morning comments, stock index futures. Well, the word of the day, and I always talk about the word of the day, is it's a mixed bag, but I'll give you one word. Washington, D.C., talking about our deficit. That will be the word of the day, deficit. We don't know what the outcome is. We don't know if we're going to go off the cliff or not. We don't know if taxes are going to rise dramatically Jan 1 of the coming year. So what we do know is we do know that we've kind of slightly downgrade of the economic conditions of Japan. The Japanese currency is much lower, and we're going to be talking about stock index futures, but I just wanted to put that on the horizon. We're still very, very concerned about Europe, Greece, and how that's going to play out, and kind of a slight downgrade in Germany economy, and they were the stronghold of Europe. So that's something to be concerned about, and that's kind of how we got where we are. Looking at the S&P, we're at 1374. Remember, we were as high as 1460 just a month ago. So we'll come back to the technicals in a minute. Let's see what's on the horizon. Now, we're up today. We're up 3. Last night we were up 10 in the S&P December contract. That was because of really Cisco earnings coming out. And the thought there is, of the 3 major index futures, the NASDAQ has been the weakest. And Cisco representing technology, if they're good, and they've been a very weak situation, if they gain strength, it would help the NASDAQ in general. Obviously, the NASDAQ futures would follow and lead the way, and they are leading the way, and it would help the whole complex of stock index futures, and that's what we're kind of trying to concentrate on. Economic information, FOMC meeting minutes, the minutes from the last meeting today, that should be important to dissect, to see if they're on board with the QE3. PPI, a little disappointing. The core, a little disappointing. Negative numbers, that's the wholesale inflationary gauge, if you will. So no problem there with stimulating the economy for right now. Retail sales, I want to say slightly disappointing. 0.2 in the core. We were looking for a positive 0.1. Retail sales, very important going into the holidays. So that's what's dragged down some of the stock index futures from very early in the morning to where we are right now. Now we'll get into the technicals. I don't want to lose you on how much time I'm spending on this. Very quickly, we'll concentrate on the S&P. We're around 1374. We're up 3. We were up as much as 9 or 10 3-4 hours ago. We are now, and I always talk about it, if you should be on a conservative basis going with the trend is short-term down. We would need to power, we're right down with 1374. We would need to power up and close above 1410. So that would be about 35 points. We could do it in a day on real good news, but nevertheless, we have to close above that on a technical point of view to go sideways to slightly up. If we can do that, if we can get over that point, then we should power our way up to 1432, and then obviously test the old highs at 1460 in that area. On the way down, looking at where we are right now, 1374, what you want to keep your eye on is the 200-day moving average in any of the stock index futures, especially the S&P. We've bounced off of it. That's around the 1365-ish area. If we close underneath it, I think that we're going to power all the way down to 1340, but we're probably not going to be able to break that unless we're going to go off the cliff, what I was talking about in the Washington, D.C., and that's going to be probably the biggest news for the next 2 months. Have said that, remember always trading futures or option in futures involves risk of loss, not suitable for everyone. You should be calling me. We can talk about anything you want. I have trade recs. I don't want to give them to you now. I want you to give me a call and we can talk about it. Good luck and good trading.